Okay, go ahead, Tarek. It's all yours.
Hey, good afternoon, everyone, and welcome to Futures 101. This is just a practical introduction into futures and how do they work. But before we start, let's go through the disclaimer. If you're watching us on YouTube, please pause it, read it ahead. Trading futures comes with involves significant risks. You need to look for potential losses, and this definitely is not a financial advice. So, what are we going to cover today? First of all, let me tell my story, share my journey. How did I land on futures? And after that, let's go. What are these future contracts? What is traded in futures? What does the future code mean? It looks very weird. Why to trade futures, the risk management, and the trading platforms that are available. So, starting with my journey, I started in December 2017. A friend of mine told me about the crypto. And there's like, you know what? There's something called crypto, and just buy the Ripple because the Ripple XRP is going to go crazy. And I did the same, and that was late November, and it just boomed. And I doubled my money, I think tripled my money in something like 2 weeks. And at that point, I was thinking about, okay, I'll just quit my job and work. All over through this time, my friend is telling me, you need to learn patterns, candlesticks. And it's like, come on, man, I did my MBA, from Manchester School of Business. That's a piece of cake. And I'm making money, so why to learn? Unfortunately, a little bit earlier in 2018, I realized that I was stuck in positions because my friend told me never to sell for a loss. So, so I'm stuck in the Ripple. I kept averaging down. So I started with 1.2. It went down. I averaged at zero point 0.8, and all the money's gone. So I started, okay, let's search the internet, especially YouTube. I found a very famous low float trader, and he had a very interesting thing. He turned $500 to 1 million. And this is real. He did it. The guy did it. But the guy is, what I didn't understand at that point, that he was a guru. I just kept watching his YouTube videos, and that was so cheap because I couldn't afford to have a membership to any community. So I said, like, okay, I'll watch the videos and I'll learn it because nothing super new about it. And the bit and the first mistake was the wrong expectations. No one was there to guide me. No one told me that, come on, you just started. This 500 to a 1 million most likely won't work for you because the other guru have been trading for years, man, have been doing it. And one of the silliest mistakes, even, I had a demo account and I didn't even download the official trading platform. And I traded my account and I booked losses because I was just trading the wrong platform. That was as silly as that. So just like, you don't need to go through this. Go learn with the right people. After that, it was too fast for me. I couldn't make it. I went to the large cap. I joined the very well-respected community, and I wanted to make money so fast. Everyone wanted the Lambo and the Ferrari. So I studied everything over the weekend. I crunched them. I watched all the videos, but there's one video that I skipped. It's risk management. That's why today I'll make sure not to have the same mistake. This is the only thing I'll be talking about. I watched all the videos about strategies, different strategies, everything. But the video I skipped is risk management. After that, in 2024, something went wrong with my PayPal. I couldn't pay for gas. I didn't know what to trade. So I looked what's going on, and here where I started with futures. So, what is futures? Futures are contracts that are legally binding. And this is the main difference between options and futures. That the futures, the buyer long must buy and the seller must sell on expiration date. So that's the main difference between the options, because options are not an obligation. You can pass on it. If you bought, if your long calls, it didn't end in the money, so what? You'll just leave it. But in futures, it's a legal binding agreement. You can get out of it, of course, if you can offset it before the end of the expiration. Okay, and this is standardized. So we know the quantity, the size, the delivery, everything. The only thing that are different is price and volumes. These are the things that make a difference. This is also exchange traded. So people who are trading forex most likely it's not regulated, but this one is exchange traded by CME Group, ICE. So this is legit. It have regulations into it. And definitely there's clearing houses, so they act as a counterpart to every trade, just to make sure that they minimize the risk. Okay, so what can we trade in futures? In futures, you can basically trade everything and anything. You want to trade hogs, you want to trade live cattle, soybeans, wheat grains, metals, platinum, gold, silver, copper, anything is there. So we have indices as the ES and the NQ, the Nasdaq and the SPY. We have metals, gold, silver, energies. We have crude oil. We have natural gas, heating oil, and we have also cryptocurrencies, which is the Bitcoin and the Ethereum. And there is currencies, the 6E. This is the euro. But my message will be here is just focus, because they might be too distracting. There's a lot of games in here. Just try to focus at least with one or two in the beginning until you get comfortable with. Okay, so let's go for the code, decoding the code. Here is the code MNQ Z25. So what does that mean? Let's split it first to the letters. MNQ, that says micro Nasdaq. And then here you can see the ES, GC, which is gold, SIL, silver, crude oil. And after that, there's another letter, which is the Z in this case. The Z, this is the month. And so we're talking about this contract is micro Nasdaq that's expiring in December. And after that, we'll see 25. So 25, basically, that's the year. In here, you will find the expirations. Different products have different expiry dates. And now a lot of products are now expiring in December, but that might not be the story when we shift to another contract. And just a week before the contract end, you'll start seeing some weird things going on, because this is a future product. People are guessing the future price. So by the time that you will reach the end of the contract, you will find it, if you're trading in Nasdaq, you'll find it trading almost with the index, with the real index, because there is no room for speculation anymore. And the last week, some people, they move into the following contract, some people are less. So we might get a low volume, which spikes, which lead to spiking price action, things like that. So be careful towards the last week of the end of the contract. Okay, the question everyone have been asking, why to trade futures? Simply because there is no PDT rule. There is no short locate. there's increased leverage. You can like put down 5% of the contract value. So that's very leveraged. It have flexible trading hours. It's 23 hours a day, so it works around your schedule. There is a tax advantage in it. You need to check with your tax counselor, and definitely diversify products. We were talking about it, and this is a very mature market. It have been there for a lot. It's highly mature and again regulated. Okay, so let's start with the risk management. Risk management, I see there's three questions we need to ask ourselves. Which market are we trading? I would like just focus on one or two markets. Every market have its own personality. It have the opening time. It have data. Like if you're trading crude oil, you must know when is the crude inventories out every week. You need to follow these up and to make sure that you're on spot when it comes to data. The second question is which session? Which session shall I trade? Asia, London, New York? Every session tend to move differently, and it have a different liquidity when it comes to different products. Like if we're talking about London session, London is considered the core of the gold. So gold doesn't get that much impacted. But if you compare it with something like the ES or the NASDAQ, you'll find that the volumes are significantly lower. And the last question, how much am I willing to risk? Shall I trade the mini or the micro? So let's dig into this part a little bit deeper. What's the mini and what's the micro? I took here an example of something that I trade. The mini, the NQ, and the micro, MNQ. The tick value here is $5. On the other hand, the tick value is just $0.50. The tick value, and let me explain what is the tick value. The tick value is the increments by which the product move with. So the NASDAQ, the ES, they move in increments of 25 cents. Other than the gold, it moves in increments of 0.1, 10 cents a tick. So the tick is different from a product to product. Let's get back again into mini versus micro. So this one, the NQ, the value per tick is $5. So the point value is $20. And again, the margin we were discussing, a day margin on NinjaTrader is $1,000, but the initial overnight is 33,423. Looking at the MNQ, it just moves a 0.50 cents per tick, $2 per point. The margin requirements is 100, and the initial margin requirements is 3,342. So basically, a 10 MNQ equals 1 NQ. This is how big is big. Let's go to risk management and the trade size. In here, we'll look at if I'm trading what I normally trade, MNQ. So I know that the tick size is 25 cents and the tick value is 50 cents. So I have this, I did this for myself as what number of contracts am I willing to take. If I'm risking 10 points, that means it's a 40 ticks because 1 point have 4 ticks into it. I'm willing to risk $100, then I can take up to 5 contracts. If I'm risking 20 points, then that's 80 ticks. That's $100, so I can take 3. 30 points, 120, I can take 1 to 2 contracts based on what I'm comfortable with. So how to make this calculation? How did I reach this calculation? This is very simple calculation. It's the number of contracts equal risk in dollars divided by tick value times ticks at risk. How many ticks I'm willing to risk. So in this example, it will be like for the 10-point risk, I want to risk $100. So I'll put $100. I'll divide it by bracket tick value. The tick value here is zero point 0.5 and multiplied by 40 ticks. Or you can take the tick size, the value of 1 point move and multiply it by points. So it will be the same. If we have a $2 point, so it will be 100 divided by 20. So that would give us the number of contracts that we use. Looking in here, we talked about there's different tick sizes. So if we go to gold, it's 10 cents. If we go to silver, it's even 1 cent. Crude oil, 1 cent. And the NG is even less than a cent, the natural gas, which they call it the widowmaker. And this is the tick values. So you need to do this exercise. I would recommend to have, instead of calculating it on the go or on the fly, just make sure that you have at least 3 categories, 4 categories, like 10 points, 20 points, 30 points. And by that, you know the number of contracts that you're willing to take. The most popular trading platforms is NinjaTrader, Tradeovate, TradingView, Thinkorswim, or Interactive Brokers. These are the main trading platforms that you can trade futures from. And for that, I would like to say thank you, and I'm ready for if there's any questions.
Awesome. Thanks, Tariq. Good information. So, guys, what do y'all think? Futures. What do you want to know? Tariq's your man.
Tarek, thanks for the presentation. How you find it like trading futures in the interactive brokers?
I trade the futures and interactive brokers through one of two things. It's either using my iPad or my phone to execute, which is slow, or using hooking it up to TradingView and using TradingView, which is again slow if you're into scalping, and it won't be the best. So it's good for long-term holds. If you're looking for a bigger move, that might be easy. And you don't have, at that point, you don't have to pay money for TradingView. For the data, you can use your interactive brokers data on TradingView. And the iPad is very good.
So you find like, okay, TradingView is like better in execution than interactive brokers itself?
Yeah, I'm sorry?
Do you find like using TradingView is better than going directly into the IB?
I use TradingView just for charting and execution, but my broker account is Interactive Brokers.
Okay, thank you.
You're welcome.
Tariq, you had a question here in the chat from Sujit. If you have to choose 10 MNQ or 1 NQ contract, how does that work with commissions?
Commissions, it's quite interesting. It's I didn't do the calculations on it, but I would expect it more or less to be the same. But it depends all on your strategy. Like I look at it as, how are you looking at it? You're the kind of person who takes partials along the way, or just you hold it till the end. So if you're holding, yeah, definitely go for 1 NQ. But for a person like me, I like to take partials at key levels while I'm trading. So I'm more comfortable to take the 10 NQ.
Mm-hmm. Yeah, I'm in the same boat as well. I'll take a few contracts on the ES. Well, actually the opposite. I'll take a couple of contracts on the ES rather than, a lot of contracts on the MES, and try to just hold it for, the large move.
Yeah, because this is your personality, Avi, this is the way you trade.
Mm-hmm. Yeah. Cool.
And you cannot close like a 0.5 contract, is it?
No, you can't.
Okay.
It's either it's one. You have to close it, all of it.
Okay.
And also here on the screen, you've got the platforms and brokers. So Thinkorswim here is the trading platform with TD Ameritrade acting as the broker. Is that correct?
Yes,
So-
Charles Schwab right now. Yeah,
yeah.
Schwab.
And Ninja Trader is an all-in-one. Right?
Ninja Trader is a platform and a broker. Yes,
Okay.
and they bought recently Trade08. This is the blue one. Some people like to use it, but I'm not sure if Trade08 have a broker.
Okay.
But they're owned with the same company as Ninja.
All right. Very good. Cool. Anyone else got any curiosities about futures, or do you know exactly how it all works? If you don't have questions, it shows you don't know, or it shows that you know.
One
Darius had a
one more question.
Go ahead, Sujit. Yeah.
Yeah. On a date of expiry, if I don't buy and sell, let's say I'm holding the contract, then what will happen?
If you're holding a contract of crude oil, they will deliver 100 barrels for you at
And
this price. So,
and
and gold,
about NQ and ES.
they will you will buy the index
Okay.
with the price that you bought it with. So let's give an example. If you're long like 6892, which is the price for the ES now, they will deliver a contract for they will deliver the index fund with this price. Even if the price went lower or went higher, you will be delivered with this price. But the margins is completely different at that point.
Okay.
Hey,
And
Dave. Sorry.
what's about that gold, silver, and aluminum, all this ticker?
Yeah, you get delivered the real product. Like for gold, you'll get delivered the gold ounce, and for crude oil, you'll get delivered the barrels. That's why during COVID, the crude oil futures were in negative territory because people were willing to pay money for people to take the oil barrels because they didn't have a place to store it in.
Yeah, that was interesting, Contango. That was really interesting at that time. Okay, cool. All right, couple of questions more here. We got Darius. Yes, you can connect IB to Ninja, as far as I've read. You can do that. Asgar, you got a question here?
So should I keep few barrels in my house if I'm trading oil? So I take them home. burning them?
Yeah, or buy heating oil for next winter, man.
Okay. And the second question that I have is that you said that when it's closing to the expiry, we have to be careful because the price action is going to be violent. Is it 1 week before, 5 days before, 1 month before, roughly? Is there any around time range?
Honestly, for me, I start checking every day, 1 month ahead. But most likely, 1 week or 10 days ahead, I move to the following contract.
Okay, and then when you're saying you're checking,
I
what
check
do you
the
see
volume.
that is acting oddly? Is it peaks that are massive? Is it just what is the sign?
No, I'm comparing volume on the different contracts, and I'm trying to be in the contract that have a higher volume.
Okay. And when you're seeing volume, is it in, for example, is there a certain number? Is it in million? Is it in 500?
No, I just open 2 charts, one for this contract, like let's say December contract, and the next one in Feb contract next year, and I will compare the day before or the session before volume.
Okay.
So let's say this today we traded X on December contract, and we traded X minus 2 on the February contract. So I'll stick to X to December. When I start seeing that the number is higher on the future contract, on the following contract, I will move to the following contract. But normally, people a week before contract changes, that becomes very tricky.
Thank you.
Tariq,
Cool.
you said options are not legally binding you to buy stock, but that's not true, right? You can get assigned options if you are like, short or whatever.
Yeah, but what I'm talking about here is legally, as in the people who bought. Like, if I'm a buyer of a put, I can buy put to hedge my portfolio, but I might exercise it if I want to or if I need to, but I'm not obligated. It's still my choice.
Yeah, but if you sell option, you are obligated then, right?
Yeah,
Yeah.
definitely.
Yeah, I didn't know about it. Like you said, it's not
Yeah.
the options are not legally binded, but I think it depends what you do with it.
Yeah, like some people, they just buy them as insurance. So I'll buy options as insurance versus a very big position in my portfolio, and the market didn't drop, so I will not exercise it. But if I bought S&P 500 or I shorted the S&P 500 futures contract, and the contract expired while I'm holding it, I'm binded to buy it at the price I bought it at.
Thank you.
Obligated. I
Yeah.
don't have the choice at that point.
All right, thank you so much, man. I didn't know that. Like, what's the difference? But okay, cool. Thank you.
Cool. All right. We got Brian and then Nasser. Go ahead, Brian.
Yeah, just real quick with the Schwab buying out TD, does that still stand where Schwab will go with these platforms as a broker? Do we know that?
Yeah, Schwab. I opened an account with Schwab, and I get access to Thinkorswim.
Well, I mean, like the Ninja Trader and TradingView and that stuff.
I didn't try that, honestly.
Gotcha. I'll look into it. Thanks.
You're welcome.
All right. Yep. Go ahead, Nasser.
Hi, Tariq. Thank you very much. It was a great presentation, especially for me. Didn't know much about futures. The only question that I have is actually what there's so much noise around. The only question I have is basically why did you actually choose to trade futures over stocks or options? As far as I can hear, it's actually a little more complicated than simply trading stocks. Is it about just timing, or was there another reason?
It was totally personal. It started as totally personal reasons. I was trading for full time at that time. I was let go from my work, and I had the whole day. I was sitting there basically. I started watching other markets, and after that, I reallocated to another country where PayPal was not allowed, and I couldn't pay for DAS. So I just woke up, and I don't have DAS. I don't have access to DAS. And there where I started looking for other options. Okay, so what's my options? What can I trade? So I found the futures market. But I gave it a go, and it's very technical. It's very easy to trade. The risk very defined for me, for myself. It's technically very clean. I can trade it whenever I have time. So I don't like if I live in Dubai. So if I want to trade in the morning, I can trade London session. If I'm a night owl, I can trade Asia session. US sessions if I work in the morning and they have the evenings are free. It's very flexible. And after that, after everything got sorted out with my PayPal, I really liked it more than other products like other stocks. I don't have to check. I don't have to pay for scanners. I don't have to watch 4 tickers and guess which one is going to go. And I don't know, but for me, I was very unlucky. I would pick the one that moved the least. and the other ones, they just skyrocket and they sit there in FOMO. So for this one, no, I trade actively the Nasdaq. I trade gold shyly lately, only because it have been moving very well. But mainly, I'm trading Nasdaq. So I'm just sitting there. I don't have to put a lot of time into prep. I just open the charts, check it, and sit and wait for my setup to show up.
Thank you.
So it's much more convenient for me personally.
Excellent. That led me actually to two other questions, if I may ask. The first question is it as cash efficient as stocks and options, or is it better both?
It's highly leveraged, as I mentioned. So, and for the leveraged, like if you have in your account the initial margins, even if you're taking a day trade on MNQ using Ninja platform, they will ask you for $100. And if you want to keep it overnight, it's 3,300. So for small accounts, you can trade an account as small as $500 on Ninja Traders. You don't have a PDT rule, so you don't have to sit and wait. That was a big problem when I started. I didn't have that much money at that point when I started trading. I had to trade with other brokers other than interactive brokers, that they were a little bit different than interactive brokers in terms of you're sending your money to offshore. I saw these as risk. I had to pay a lot for commissions just to get through to get around the PDT rule.
I suppose when you're saying it is actually highly leveraged, it means that actually your risk is also quite elevated compared to what we are working with stocks. Is that correct?
Yes.
That means that it's somehow comparable to options in terms of this kind of
yes.
Right.
Like if I look at the last 30 minutes gold futures, it moved it moved 10 points. 10 points. So that's 10 points. Every point have 10 ticks. So it did almost $1,000 in 30 minutes on a micro.
Okay.
So it's highly leveraged.
And the second question I wanted to ask is, when you're saying that at certain time of the day I can actually trade London zone or something that you mentioned.
Yes.
You explained it, but actually I probably missed it. What do you mean that you're trading London or you're trading Malaysia?
Okay, so like let's say I live here in Dubai, so and I have a day off. So London session starts 11 a.m. or 12 a.m. Dubai time. I can normally there is liquidity coming to the market during these market hours. So it have a different personality. The market moves differently, and I think Brian also he tried to explain this a lot in terms of sweeping and stuff like that. Every market have its own personality, and every product need to do well during different markets. So if you want to trade Aussie dollars, you'd better sit in Asia session. But if you're not sitting in Asia session trading Aussie dollars, don't expect it to move while US is open or London, because it's already overnight there.
And that means that you have to be careful about the opening of each session when you're trading certain things.
Yes, opening and get comfortable with the session. Like if you want to trade a certain session, just make sure that you understand how this moves. This product moves during this session. So, because again, they have a different personalities, but ES and the Nasdaq, they don't move. They move during London session, of course, but they have much more significant lower volume
Correct.
than the US session. So put that in mind. Gold, no, gold it trades on a higher average volume, and the discrepancies in volume, it increases during US market, but it's not as big as the Nasdaq or the ES.
Okay. Thank you very much for the explanation. It's too complicated for me. I probably stick to the stock.
I'm sorry.
No,
I'm the
you
bad
explained it.
one.
You
I
explained
couldn't.
it clearly. It's just over my head. I need to actually stick to the stocks for now.
It's like trade every session with every product as a different
Yes.
stock. So if I'm trading Nasdaq in London market, I will be more careful towards my size, and in some days I might increase double my size because if the market is moving too slow. But again, it have a low volume, so it can go against me very fast. So I just need to be careful about these things. So every product, every market open, it have a different personality.
Yeah, thank you very much. Sorry,
You're welcome.
for asking too many questions.
Sorry,
No
Tarek.
worries.
So if
Yeah.
I can add something here, like, so
Yeah, go, Dave. Go ahead.
yeah. So in this one, like, okay, when I think like, okay, the way I look at the futures at the future market in the London and the Asian session is like, just consider like take the same way like which you take the US session, just a little bit slow, just to simplify it. Like, so it's not that fast. You don't expect like a very big move. And even if for a 50 points move, like you might have to wait like for a couple of hours, which you might get like in 5-10 minutes, like in the US session. So
Yeah, sometimes, yes.
this is way, and I find like very smooth, like during the Asian and London session. Like, so it's not as crazy as like which happened like in during the regular trading hours in the US market. This is what I found like so far, like trading them.
For some products, sometimes it works good, but if you look at Asia session for the Nasdaq, which was last night, you'll find it like it was moving sideways.
It happens
didn't-
sometimes, yeah.
Yeah,
It does. Like, so it does.
So, and sometimes they have their own personality. And again, the same thing happened on the 25th of October. It just moved sideways. So some of them,
That's true. Like, so majority of the move is going to come like what the US market is going to do. Rest is like, okay, they keep on doing the follow up on that or like sideways, but like still like, okay,
yeah,
it's
but
not
if you
that
compare
option like to trade it. Like, so I will say that not that complicated. It's pretty easy, just like we trade the equities. Like, so nothing to make it like super complicated on that part.
No, sometimes the best moves happen overnight.
Yeah, it does. Like, so especially when Trump opens his mouth or like anything, like, so then like those
Especially
are
when he was in Asia, yes. So
Yeah.
we'll wake up and the market already, the rally's over. Yeah.
Yep. Even the sell-off or like the buy, like that's amazing at that time.
That was overnight and during the Asian sessions, yes.
Yeah, no, those are good. Yeah, no, thank you. It's a really nice one. Like, so for your presentation, thanks. And someone asked, like, okay, I don't know, like if that got answered or not. Like, so if they can connect like IB with the Ninja, I would recommend like, okay, not to do that because it costs you like $100 extra. It's simple, like, okay, you use put like money into the Ninja, like just put like some money there and access their data. Like it costs like $20-25 somewhere on that. That's like a better approach, which I found like personally, but like everybody has a different way of looking at it.
Thank you very much for sharing that. And guys, this is the best thing about being in a community like the Aviators. You get to meet a lot of people that have a lot of knowledge, and people just share what they know, what they're sure of, with each other. I'm privileged to be trading with you guys, and we'll put the link down for people who want to join the Aviators. we're looking forward to see you on the other side.
Yeah, this is awesome. Definitely got a great group here. I'm also really happy to be here with you guys. It's a privilege. So good stuff, man. Good stuff. So we got a question here as well from Al, and then we got Asghar as well. Al wants to know, Tariq, which strategy or setup you found works best for you?
Basically, I trade bigger time frames. So I use a top-down analysis, 4 hours, 1 hour, 30 minutes. And I'm looking for ABCDs, trend continuation on the 15 minutes with the entry with the 2 minutes or the 500 tick chart.
Cool. Very good.
And
Thanks.
after the webinar of Sujit, I started using his levels. They're like magic.
There you
I've
go.
hooked them, these ones, man.
That's excellent. There's another good reason to be amongst a good group of people, because you get all the, just as you said, all the wisdom. And we got that from Sujit's previous webinar. So.
Yeah, and I kept reaching him out, asking him for questions, and the guy kept answering me because we're connected on Discord.
Nice.
That's amazing, man.
Beautiful. Love it, guys. Yeah, Asghar, go ahead.
Okay, so I have 2 questions. One is about these different market times. So this is what I found. I just want to make sure that what I found is correct. So obviously the US session is from the 9:30 to 4 p.m. The all trading. So for the Asia, I'm talking Eastern time. Is it from based on Eastern time? Is it from 8 p.m. to 4 a.m.? Is that correct? And is the London session is from 3 a.m. to 11:30 a.m.? Is this what I'm finding correctly? So there was an overlap between London and US session from 8
Yes.
to 11:30.
Yes, there is overlap between London and US session. US session close nearly top of the hour, 12 or 1 p.m. 12 Central, 1 Eastern. This is the time. This is the time when London market close.
Okay.
In the mid of New York session.
Okay, got it. Thank you. And then, sorry, Brian always talking about this London sweep, Asia sweep, US. Yeah, sorry for my dummy question, but what does this mean?
He's the guru. I think he's the best one to talk about these things. There's some theories in the futures that you have to go higher than the previous session, or you go down to the previous session at lower point, take stops from there, and start moving on the other way around. But if Brian is on the call, I think he can explain it better than me.
Yeah, Brian, you here? You want to take that question?
Yeah, I mean, exactly what he just said. You know, there's theories like if you look at today, for example, you know, Asia range. So there's 3 things Asia can do. It can range, it can go up, it can go down. That's it. So based off what Asia does, how does London respond? So, you know, on the East Coast here, we get the benefit of, I mean, I don't know about you all, but I'm dead asleep during Asia, so it can do whatever it wants to do. And about half of London is in the pre-market for what we see on the, you know, on our platforms. So what was the response? You know, today London broke the high of Asia and then immediately rejected and came back in. So my train of thought at the open, and it's why sometimes I'll get in positions very quickly, is, you know, the signal is we're going to go at least try to attempt to sweep Asia. Now, granted, you know, if you look at the very first London candle today, I think it swept Asia by a penny, but for me, that's not a real sweep, you know. So, and I had a bunch of, you know, correlative VPOC things that were on there, you know, and we went down and we swept and got into, you know, yesterday's kind of afternoon late chop, and, you know, we pushed back up. So now what's the response? You know, we're still technically in the London time frame. You know, London had a huge buy signal, you know, or the market had a huge buy signal around, you know, 10:20 this morning, 10:22, and we pushed up. Well, we got a nice green candle. It was on lower volume on the 30-minute. We double top to the penny, and now we're pushing back down. So, London is technically in a downtrend. From its break of Asia's high, we've been downtrending. We got a pullback, and now we're pushing back further. So what I would be watching at 12 that's technically when it's US's, New York's time to be the star. What is it? What is the initial response, and what does it look like? And that's where you can get into those. If you take it block by block, break it down into 3 parts. What's the initial response? Does it range early? Does it look bullish? And 0 DTE, you get in at 230 and catch a crazy reaction to something based off of that. Everybody knows how that works out on the option side.
I'm just checking the volume of these ES, for example. The US session is just 1,000 times of whatever it was in Asia and London. I'm just reading from TOST US. So basically, it seems that the actual move is in the US session in the future. Maybe I'm reading it wrong, but the volume there is not even comparable.
It's sorry if I may just jump in here. So T, first of all, great presentation. And just one thing I wanted to mention here is I think for a lot of the beginners that are questioning about the futures market, the futures market, it's not like the New York Stock Exchange or the NASDAQ in the sense that it's basically running 24 hours, nearly 24 hours a day for the entire week until I believe Friday, 5 p.m. Eastern time, and then it closes and then it reopens again on 6 p.m. Eastern time. So that's why we have all these Asia and London sessions, is because the market is basically running 24 hours a day, the futures market specifically. And the reason being that New York or the US market and you see all the volume is because it just has the most amount of liquidity in the market. That's why when we see the New York kind of the bell ring at the open, you see how much volatility comes in, and that's just simply telling you that this session has the most amount of liquidity.
Got it. Yeah. Thank you.
Thank you, Ray.
And then I had another question from Tarek. It's just a matter of, you said you're trading mainly NQ, but in the previous days we hear from other traders that are saying that NQ is behaving oddly sometimes. So, and it was a suggestion from them, a recommendation that maybe trading ES would be better. I know that different traders have different style. I get it, and then each of these tickers have their own character. But I just want to get it why you move more toward the NQ versus the ES.
It matches my personality more. I get very anxious when things move slowly, and I find it very challenging to hold when things are moving slowly.
Okay, so what is your average hold then in the case? 15 minutes, I don't know, 10 minutes, 1 hour?
Most likely, let me go through my stats. I'm not a very good holder. My average holding time is around 15 minutes.
Okay, got it. That the 15 minutes was the very first one I thought. And then using the top step, you were saying the dashboard, I'm guessing that you're using a dashboard that top step has in order to show you these stats.
Yes.
Okay.
Yeah, I use it. It's much more easier to journal.
Sure.
Yeah.
Thank you.
For my account, I try to take screenshots of every day.
So you take a screenshot or you don't?
For my personal account, because I trade my personal account too. I have 2 accounts. I trade with a prop firm, and I trade with my personal account. So I take screenshots.
Okay.
Cool. Very good. Thanks, guys. Sene got a question here in the chat. Does IBKR use the quarterly codes with a ticker to denote which contract is the one trading? ESH, for example, for the March expiry. Do you know about this, Tarek?
I'm sorry, I didn't get that, Avi.
Does IBKR use these codes, these futures codes that we discussed, like
yes.
FQ and MNQ?
Yes, but you don't need to learn the month, because you can use the continuous. They have something called a continuous. Sorry, a contract. So this one, it makes you trade the most traded one at the point. It have an infinity sign beside it, and after that you'll find them arranged with the date. So you can choose the nearest date to what you're dating, like what you're trading. I don't know if I made it clear. You'll search with MNQ, and it will give you, if you want the futures, so you'll click on futures, and it will give you options. The first option will be the continuous, something called continuous contract. After that, you'll find the dated contract. You can start with the continuous contract. They will automatically redirect your trades towards the currently traded contract, which is December.
Cool. Very good. Thanks, Tarek. All right, guys. Anyone else? Anything else about futures for Tarek? All right. Looks like we're clear. That was awesome, Tarek. Thanks a lot. Very informative and clear and simple. Thanks for putting this together. Much, much appreciated. And yeah, that's the whole point of this group, guys. We have guys like Tarek. We have so many people in here who have a lot of wisdom and willing to share it as well and present it and share it with us so we can act upon it and then do it together, supportive community. So all good stuff. Thanks, all of you. This is great.
And thank you, Abi, for this great opportunity to make this community. The aviators can share what they know, best practice. It's not a one call. It's not a one style. It's a lot of people trading different things. Everyone have his own personality and they share it. So it's amazing, man, what you've done to this community.
Yeah, man. Thank you. Thank you very much. Thanks, all of you. It's a real pleasure. Thanks, guys.
Thank you, guys. Have a happy Halloween, and I'll be joining you for the Halloween party.
Yeah, happy hour. Halloween happy hour starts right now as we terminate this recording.
Thank you, Tarek. Thank you so much for the presentation.
Thank you, T. Really awesome.
Thank you, Mark. Thank you.